Hi folks, Dan Ritter here with Best Philly Homes. I've been fielding a lot of questions about inflation, interest rates, housing bubbles, and so on lately. So I want to take a moment today to allay some fears people are having about the housing market. Rates have been climbing up again, and while we don't expect that to change in the near future, we do expect that increase to slow considerably. This rate increase is, in many ways, anticipatory of inflation and reactionary to historically low inventory. Let's look at what the National Association of Realtors is saying. While higher short term interest rates will push up mortgage rates, we expect some of this impact to be mitigated eventually through lower inflation. Thus, we expect the 30-year fixed mortgage rate to continue to rise, although we aren't likely to see big jumps that occurred over the past few weeks. So, what does that mean? It's saying inflation is driving this increase in mortgage rates. Like I said, we do expect it to continue to rise, but we don't believe it will be at quite the rapid pace as what we've seen over the last few weeks. Okay, so that's what NAR is saying. I also want to share with you what Freddie Mac is saying. History suggests that when rates rise, there's an initial bump in home prices, as many move quickly to buy a home before rates increase further. But after that period, home prices slow. Freddie Mac analysis shows that a 1% increase in mortgage rates results in home price appreciation that is 4 percentage points lower. For instance, a 1% increase in mortgage rates would change home price growth from 11% to 7%. Alright, what does that mean? We certainly feel that home price appreciation will slow. Mortgage rates will slow some of the frenzy, especially what we've been seeing outside the city proper. But, and this is incredibly important, we're not talking about depreciation. We're talking about a softening, a deceleration. And that will help slow some of the frenzy as we move forward in the housing market. That's a lot of real estate and mortgage jargon. Here's the summary. Yes, mortgage rates are rising. Yes, appreciation is slowing. Yes, inflation will have some impact on the housing market. However, the rise in mortgage rates is expected to slow considerably. Slow depreciation does not equal depreciation, and the combination of these things will calm some of the frenzy we've seen in the market over the last 2 years. Finally, one factor that we didn't talk a lot about today is low inventory. At the same time as all of these shifts are happening, housing inventory continues to be historically low. That's a conversation for another video entirely, but the most important takeaway is that we are not in crisis mode. Several moving parts to the housing market are adjusting to avoid a crisis down the line. And while rising rates may seem concerning, it's all part of the process to ensure a healthy housing market. Thanks for sticking with me through this video. I hope that you found it informative and that it helped calm some of your fears. As always, we love connecting with you, so don't hesitate to reach out with any questions you may have. And of course, if you're interested in buying or selling in the Philadelphia area, please reach out so we can get started on your journey. I'm Dan Ritter with Best Philly Homes at Keller Williams, Philadelphia, and remember, with Best Philly Homes, you can expect the best. Make it a great day.